What's going on, guys? I hope you all are doing well this afternoon. I am gonna cover Bitcoin and Ethereum today, if you don't mind. Alright, so I'm just gonna get to it. I've actually been trading hardcore on Ethereum as of late. It's been a pretty interesting range, sideways and down, if you will. Pretty choppy, but at the end of the day, completely doable. Okay, so yeah, I usually start with Bitcoin, but I just realized that I'm here on Ethereum, so I'm gonna do Ethereum if that's okay. Okay, so let me go to the 4-hour chart. So what's rather interesting is that price is now starting to get very comfortable breaking back above the exponential moving averages and trying to flip them as support. If you can look into the details of the market cipher B indicator, we are above the zero line. So ultimately this is bullish. We are getting some sell signals. But as you can see, the money flow is starting to stagnate a bit, so it's kind of creating this form of a little bit of indecision. But ultimately, I do feel that the exponential moving averages have successfully, or at least the 9 exponential moving average has successfully crossed. That's usually bullish, not gonna lie. Let me get this back to traditional candles here. What I'm seeing is a while ago we did kind of have this trend. It did break out. We are we are getting rejected here at the zero line. Uh, Essentially that rejection, the initial one, did lead to this dump overall. We are still below this. Actually, this is I turned off the 100 exponential moving average on market cipher A, and this is actually the 200 exponential moving average, just because it's a slower average, but it's also, as you can see, pretty key in regards to support resistances and stuff like that. Now, we are still below the 200 exponential moving average, so that's not good in my opinion. We are still at this falling wedge, and frankly, we are breaking out of it as it stands. We're still printing candles above, so theoretically, price could still kind of fall through here and still reverse to the upside. So that you must maintain that perspective. I must admit. But if you do see a 4-hour candle close, whoops, if you do see a 4-hour candle close below this line, then yeah, I would just completely just, exit any longs, not financial advice, but I completely exit any longs that you would have because that would be a disgusting dump. Yeah. But anyway, we are still experiencing positive trends to the upside still. As you can see, we have, oh, sorry, that's my indicator. I don't know if you heard that. It was a little beep. Anyway, but we do have a low, higher low, and currently as it stands, a higher low. So we do have an uptrend. That's good. We also do have higher highs. We got a high and then a higher high. So you show me a higher high, I show you a buy. That's kind of like with the statement in Traders Land. Now, I don't like that price is below 611, but frankly, from the 4-hour, we did regain the 1,555 mark. I believe it was 1,557 last time I told you, roughly. Yeah, so on the 4-hour, we did regain that spot. As long as we're above this, I have to classify this as support. We could still have a couple bounces around here. Not gonna lie, I do have some limit orders periodically here, and I do kind of hope to, get a bounce rally of some kind. But I do have tight stops given the circumstance that the exponential moving averages are still red, so I have to be bias bear. Um, Oh, look at that. I think I'm about to get filled. But anyway, it's not guaranteed that this will sustain itself. We are in a volatile market, but given the circumstance, I want to see this fade away. You know how it is yellow right here? I want it to go gray, kind of like how it is here. If I don't see that, and actually I see the blue go red, I'm most likely just going to close my position altogether. Um, But yeah, as far as pattern trading goes, we do have this like pretty apparent falling wedge breakout, and it broke out today, thankfully. Oh man, I should not have added that mail app. Sorry about that. Okay, onto my desktop. It's been popping up all freaking day. Okay, but as far as the indicators are concerned here on the 4 hour, oof, we got a bearish divergence that's kind of playing out a little bit. We do have waning momentum here to the downside. The histograms are pointing down, but the MACD indicators did cross the zero line, so I'm curious as to how that will develop. The RSI did cross the 50 line, which is pretty bullish, but it needs to sustain this momentum. Maybe like a back test, but at the end of the day, a back test to the 50 line, or maybe even all the way down to 45, that wouldn't be surprising that. But we do have higher lows at this time on the RSI, so that's pretty crucial from my perspective. Alrighty. Also, the TMA did cross above the fast-moving average. I'm sorry, the slow-moving average. The fast-moving average is above the slow-moving average, which is ultimately bullish, but it doesn't mean that we could periodically get some tests to the downside. Wouldn't be surprised seeing that either. Alright, so I'm actually going to move to Bitcoin. I think I did a pretty decent job covering Ethereum. Overall consensus of what Ethereum is going through. Yeah, as long as price is above or printing 4 hour candle closes above 1,555, we should still be predominantly bullish. I mean, it will get tested. It's still a wait and see. We are above this key level, so as long as we see 4 hour candle closes above this green line here, and I highly recommend it if you are following the charts to add this as well. So if you go to the 4 hour chart on Ethereum of your choosing, right? I'm using ETH USDT, and you want to drag a line from the top and then just the nearest local top right here at the top's edge right there. And essentially, yeah, you'll be able to have this chart just like how you're seeing it on mine. And yeah, so as long as you see a 4 hours close above this, like, you know, I would predominantly be bullish. Right now, we are kind of resetting. We are seeing price try to print above the 9 exponential moving average. I do see the 9 exponential moving average as the slow moving, well, the fast moving average, if you will, and it's kind of like the medium of where price should be, and that essentially is roughly at 1,563. So as long as I see price kind of like um, chopping within this range, I'm gonna be a bias bullish, frankly. Um, Invalidation point would probably be a break, not only below this a candle close back into this falling wedge, but a line in the sand would obviously be this area. It has acted as support, which is at 1,524. If you see a 4 hour candle close under 1,524 roughly, then yeah, it's safe to say, you know, if you wish to open up some fresh shorts. But at this time, you know, the Bulls did a good job in not only breaking out of this falling wedge, but also have had the ability to maintain support on the higher term time frame. So this is pretty huge. All right, so I'm going to move to Bitcoin. All right, so Bitcoin is in a similar pattern as well on the 4 hour chart. So as you can see, the money flow is expanding to the downside. I do not like that, but I do feel that we are above the zero line right here. We did get a sell signal, but as you can see, the wave is starting to chop a little bit. So it's pointing down, now it's kind of pointing up, so that's rather interesting. Also, the VWAP is also pointing up, so that's a potential buy signal. And we are getting it right now. So that makes sense to me. Uh, Now we are close to the zero line, and this zone is a notorious fake out zone. You know, it'll come up, come down, come up, come down, come up, come down, and come up, and then all the way come down. You know what I mean? So it's this is like we're in Chop City right now in regards to the 4 hour. Um, yeah, it's going to be really difficult to get like a really good entry. Basically, from my perspective, um, if you do wish to long this, not financial advice, I always like to add limit orders. Limit orders are actually, if you do a market order, you're actually paying more fees, but if you do a limit order, the exchanges will sometimes pay you to initiate a purchase. So, yeah, every 4 hours or so, exchanges will pay individuals to cover shorts and long positions and all that kind of stuff. It depends. Look into your exchange, but yeah, limit orders actually are the best because you are able to get a basically no fees upon purchase of a trade, and yeah, you can go about it like that. Also, yeah, if you wish to support the channel, I do have a KuCoin link in the description below. Yeah, you can get like a discount if you actually sign up and get like some crypto through there. I like KuCoin myself because I like to collect altcoins there, but you can also get more traditional stuff like, you know, Bitcoin or Ethereum or Solana or Cardano and stuff like that. But not gonna lie, there's some badass gems, altcoin gems that are always there, and it's available for United States citizens because, uh, you know, they call this place the land of the free, but like apparently not for crypto because like all Americans are banned for most exchanges. But anyway. I digress. But going back to it, in terms of like limit order entries, I like to turn off, and you can do it really simple. Um, yeah, I like to like you see this on TradingView. If you do have TradingView, there's a little eyeball, little button. You just click it, and you can hide the actual candles. And this is where you can actually do. You can calibrate like, oh, okay, this is where the 9 exponential moving average is. And from there, you can then figure out, okay, so this is where price usually hangs out at. So therefore, if you want to do a limit order, let's say price is like, you know, above this or below this price or whatever, you could just, you know, either way, like you set your limit order and, you know, just set it and forget it and then just like let it ride for a little while. Yeah, that's kind of like how I see this. But key issue that I have with Bitcoin is that it's below 20.8K. It has not back tested this part as resistance just yet. I do feel like this might be some chop, but what's rather interesting, I'm not gonna lie, here, this could be a precursor. Let me take off the at least the Fibonacci levels. We don't necessarily need them right now. What I'm seeing right now is a potential inverse head and shoulders pattern. If we're able to see price come back all the way up to 21.7, get rejected a little bit, hang out a little bit above, you know, the 20.8K mark, then we can print that other shoulder. Now, if that's the case, now this is way ahead. I'm not gonna lie, this is like jumping the gun hardcore, but it's just something I like to do just to get better prepared for the days to come. Um, we have the candle close breakout, which is right here, and it would be roughly near this other resistance area at 22.4. Measured move is actually at 22.3. Um, Oh, I'm so sorry. I'm doing it wrong. Sorry. Actually, yeah, I'm supposed to be doing it right here. My apologies. Wow, completely botched that. Okay, so if in fact price does grind all the way up, gets rejected, comes back tests 20.8 as support, and then breaks out, it actually matches up really well with this previous zone right here, which is at 23.8. That makes a lot of sense to me, frankly. This made some sense here, it did, but yeah, as you can see, these zones, I have 1, 2, 3, 4 different resistance zones here. Um, yeah, that shows confluence, frankly, and a pretty decent recovery if I do say so myself. But yeah, yeah, just gonna do that one more time just so like I don't confuse people. I did it at the point of breakout of the falling wedge, not necessarily at the point of breakout of the potential inverse head and shoulders. So how you do that, you get to the bottom, candle close of the price, to the top of the potential neckline, and then you move the measured move to the point of breakout, which is this horizontal resistance line right here. And it actually targets all the way back up to the top, I'm sorry, to the bottom of that mini head and shoulders pattern that we had up here. Um, yeah, so head and shoulders patterns are bearish. Inverse head and shoulders patterns are bullish. So yeah, just something to keep in mind. I am seeing price uh, not once but twice already backtest this line as support, so I have to see it as such. Now, there are invalidation points, just like how Ethereum had an invalidation point, which would be right here at 19.754. If you see hourly candle closes below that section, I'd be very concerned about the price action, how it currently stands. It's what we're seeing right now is predominantly bullish. Um, but at the end of the day, there are invalidation points. There's no guarantees in trading. You have to work with probabilities. Probabilities is what really sets you up for success. You know what I mean? You have to be prepared for the downside. You have to be prepared for the upside. Now, from my perspective, I am seeing more upside today than downside. Yeah, I was doing a video yesterday and essentially, I was like, "Oh my God, this video sounds exactly like the video that I did 2 days ago." So I didn't. I was like, you know what? Like, I just ended up deleting the video. I didn't even like post it. I was like, okay, I sound literally the same. So that's why, if you were wondering, um, yeah, I didn't really do a video yesterday. But anyway, all right. So regarding the 4 hour, we are seeing a little bit of waning momentum to the upside, though. That's a little concerning. But ultimately, I do feel that there will be some resolution within the coming hours. Either it's going to be a bounce from the slow-moving average, right, or the slow-moving MACD indicator, or a cross down. Now, what I do like is that we did have a bullish divergence from all the way down here. We did have a bullish divergence, and also we are getting that bowling out event right here, where the slow moving average, this red line here, is eventually wanting to curl to the upside. Now, obviously, we could have some hidden bearish divergences and such. Now, hidden bearish divergences are weaker than just regular old bearish divergence. Hidden bearish divergences are weak. But anywho, yeah, it looks like we did kind of get rejected off the zero line. This is a notorious fake out zone, but as long as the 4 hour um, does bounce off of the slow moving average, we're still a go. We are in a consolidation phase. The RSI is trying to break out of the bearish control zone. It did kind of act as support right here, so that gives me some confidence in regards to the possible continuation. But yeah, if you're more of an RSI trader, if you see kind of like the RSI go below, I would say this area here at 39.86, that would be kind of like my line in the sand to kind of call it quits, because that would invalidate this trend that we have of, a low and then higher lows right here. Just something to keep in mind. Yeah, same thing with the TMA. The TMA did get rejected off of the 50, but is trading above the slow moving average here. So this could be a consolidation period to ultimately continue to the upside. And same thing with the TMA. If you see a candle close right here at 39.87, then it's just more likely that we're going to see consolidation further to the downside and maybe even a breakdown. But yeah, that's pretty much all I have for Bitcoin and Ethereum. Right now, we are seeing some negations here. We are seeing some form of a trend as well. ever so slightly trend, so it's probably going to be bouncing within this channel. But yeah, the invalidation point, like I said, is 19.754. But from my perspective, I do feel that the bulls have done enough to maintain this upward trend. It's just a consolidation period at this point. But anyway, um, yeah, I'm pretty much going to leave it at that. I just want to say thank you so much if you're still watching. I appreciate you. Yeah, if you have any questions, if you have any, recommendations of like coins or whatever like that, I'm happy to do so. Yeah, if you haven't already, please like and subscribe and share this video if you think this is worth any value. But yeah, also just to keep a little takeaway as well. The 4 hour it does have a trend to take in consideration. I just realized here. Um, if in fact we do see, I'm just going to make it dotted line. Now there's so many lines and stuff like that. I'm going to differentiate it from everything else. It's going to be this dotted line here and here, this dashed line. We do have a slight trend, maybe a possible triangle to deal with right now. Yeah, actually, yeah, that holds weight. Yeah. Oof. This could be a bear flag, actually. This could be a bear flag or a triangle. Either way, I'm glad that I caught this before I said bye-bye. But yeah, we do have a downward trend within this triangle pattern. Now, it is right above support, so it's hard for me to say that it's a bear flag. But if it is a bear flag, um, yeah, like if you see an hourly candle close, actually that's even better because you don't have to wait for 19.7. You can actually just wait for this breakout here. Worst case scenario. Let me go here, let me go here. Okay, let's make it thick. And I'm just gonna put support, make it green, and I'm gonna make it red. Boom. Alright, so we have support. I would consider this a supply line. We do have resistance, basically, as people open up shorts or they close out their longs in this area. So we're kind of at a key inflection point. Let me see. We probably have, another 2 days? No way. Okay, yeah. We do have probably another 2 days to find some resolution here. It could happen earlier, but at the latest 2 days to really resolve out of this triangle pattern. It would be interesting. It would be interesting to have like a triangle breakout to the upside. So let me do a measured move here. All right, so I'm going to do a measured move. I'm just going to assume it breaks out here. That would align really, really well if it broke out there. Yeah, it would align really, really well if it broke out right there. Breakdown. Oh wow, it would continue. You see, that's the thing. Some people think this is like, BS or whatever, but like if you do technical analysis long enough, like there's so many things. Like when you see confluence, it just makes you so much more comfortable, makes you so much more like confident in regards to the direction of the market. Because really, like if this triangle does break to the upside, we are looking at basically a retest of 20.9, and then we'll find us some consolidation or resolution to either the upside or the downside. Now, if this is just a triangle, we should at least see a back test of 19.4 roughly. Now, if it's a bear flag, which honestly I don't think it's a bear flag because bear flags usually develop closer to the dump, if you will. Right here, it doesn't necessarily look like that. So I can't confidently say that this is a bear flag. I'll be honest with you. It looks more of like a symmetrical triangle at this time. Yeah, so this is important because the symmetrical triangle is ultimately bullish. The averages way slightly to the bull side. And it lines up really well with support. So worst case scenario, even if price does want to dump all the way back down, as long as it's above this line, because this line is now acting as support. So that actually, in my perspective, I wouldn't put my stop loss right here. I would actually put it like somewhere below the 19.5 range, honestly. That's kind of like my line in the sand. But obviously, though, that's the worst case scenario. If you're really like risky, and if you're more of like risk on, if you're more risk on, then you could put your stop loss all the way down here. If you're more conservative, smart, wisely conservative, you can actually put your stop loss below this line ever so slightly. Uh, I would argue, just spitballing it here, somewhere, slightly, I would say, yeah, this would make sense. Basically, at 19.85. Yeah, it just depends. If price continues to consolidate, and I would probably just kind of like follow along with the price and essentially just make sure that my stop loss is below the line, just under price. I think that would make just a lot of sense, like basically a very fluid stop loss. But as long as you can close it out a little below the support, because if this line of support does ultimately break, we are going to see more percentages to the downside. So if, for example, if price continued dumping, we could theoretically see a 4% break. Now, if Bitcoin breaks down 4%, you can expect, Ethereum to, fall 6, 7%, and altcoins, 10, 15, 20%, depends on their market cap size and such like that. But anyway, I'm ranting. Yeah, I appreciate you for sticking around. Take care. Have a great one, and bye-bye.